Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Budweiser Brewing Company Apac Limited Annual Report. Budweiser Brewing Company APAC Limited offers a diverse range of businesses and services across various countries. The company's primary focus is on brewing and distributing beer in key markets such as South Korea, Japan, New Zealand, China, India, Vietnam, and internationally. The company provides a portfolio of beer brands that cater to different tastes and preferences. These include Budweiser, Stella Artois, Corona, Harbin, Hoegaarden, and Cass. The services offered by the company encompass brewing, importing, marketing, distribution, and sales of its beer brands. In addition to these core services, the company also engages in various business activities such as market research, brand management, and customer support. With a rich history dating back to 1876, Budweiser Brewing Company APAC Limited has established itself as a leading player in the global brewing industry. Budweiser APAC stock price increase. A strategic move towards growth. The stock price of Budweiser Brewing Company APAC Limited has seen a notable increase of approximately 10.66% over the past year, reaching 18.95%. This upward trend can be attributed to several strategic moves and positive market indicators. One key factor driving investor confidence is the company's focus on premiumization and digital platform adoption. By targeting younger and health-conscious consumers, Budweiser APAC aims to enhance revenue, margins, and operational efficiency. The successful expansion into underpenetrated Asian markets and growth in premium alcoholic beverages have also contributed to this trend. Management changes and price adjustments have also played a significant role in the company's performance. A change in leadership is expected to positively impact the Chinese unit, while price increases for selected high-end beers in South Korea demonstrate the company's pricing power in that market. The success of non-alcoholic Cass Zero and sugar-free Cass Light beers further highlights Budweiser APAC's ability to adapt to evolving consumer trends. While challenges in China have led to a decrease in total volumes and revenue, positive performance in South Korea and India has helped offset these losses. The company remains focused on strengthening its portfolio and market strategies for future growth, with a commitment to sustainability goals that may also be viewed favorably by investors. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of market trends and performance indicators. On the growth side, India has been a significant contributor to revenue expansion, driven by strong double-digit growth in total market share. South Korea has also seen continued overall net revenue per hectoliter (HL) growth, while APAC East has experienced increases in both revenue and revenue per HL. In addition, Budweiser's premium and super premium portfolio has been a key driver of revenue growth in India, further contributing to the country's strong performance. On the other hand, China has seen a decline in total volumes, mainly due to footprint issues, resulting in a -6% decrease. APAC East has also experienced declines across all metrics, with the largest impact on normalized EBITDA, which decreased by 46.7%. These trends highlight the importance of market-specific factors and product portfolios in driving revenue growth or decline. The company's financial performance is a key indicator of its overall health and stability. One crucial aspect to examine is the generation of positive operating cash flow. According to the provided information, the company has indeed achieved this milestone. In 2024, the company generated $1,134 million in operating cash flow, indicating a strong foundation for future growth. However, it's essential to note that there was a slight decline in 2025, with the company generating $951 million in operating cash flow. Despite this decrease, the company still managed to maintain positive operating cash flow. The data suggests that while there may be some fluctuations, the company is consistently producing positive operating cash flow, which is a testament to its financial resilience and ability to generate revenue from core operations. The company's debt level has undergone a significant shift, with both positive and negative changes. On one hand, non-current interest-bearing loans and borrowings decreased from $68 million to $60 million, indicating a slight reduction in long-term debt obligations. However, this decrease was offset by an increase in current interest-bearing loans and borrowings, which rose from $136 million to $217 million. This substantial jump in short-term debt has likely led to higher interest expenses for the company. The increased current liabilities have undoubtedly contributed to a rise in interest expenses. As a result, it is reasonable to conclude that the company's interest expenses have changed significantly, primarily due to the surge in current interest-bearing loans and borrowings. This development warrants close attention from financial analysts and stakeholders, as it may impact the company's overall financial performance and stability. The performance of various segments within the Asia-Pacific region has been underwhelming. The Asia-Pacific East segment struggled across all three key metrics: volumes, revenue, and normalized EBITDA. This poor showing was mirrored in the overall total Asia-Pacific performance, which also failed to meet expectations in these areas. In contrast, the Asia-Pacific West segment showed some resilience, with its normalized EBITDA outperforming that of the East region. However, it still lagged behind in volumes and revenue, indicating that while there were some bright spots, the overall picture remains one of underperformance. Management is optimistic about the company's outlook, citing a clear strategy to deliver sustainable long-term growth by 2026. The focus is on rebuilding momentum through enhanced execution, with a particular emphasis on organic growth in key markets such as China, South Korea, and India. By investing in megabrands, the company aims to strengthen its competitive position and drive future growth. This vision for the company's future growth suggests that management is committed to achieving specific goals and positioning the organization for long-term success. The company's financial performance reveals a commitment to rewarding its shareholders. As evident from the provided summary, the company has indeed paid dividends in recent years. Specifically, it is stated that dividends paid to equity holders for the years 2025 and 2024 were $748 million and $698 million respectively. This indicates a consistent trend of dividend payments by the company, demonstrating its ability to generate sufficient profits to distribute among its shareholders. The significant figures mentioned in the summary further emphasize the company's financial stability and its willingness to share its success with its investors. There are concerns about supply chain disruption and inventory buildup at the company. One major concern is the potential for customs audit claims, which have already resulted in a significant non-underlying charge of $86 million as of December 2025. Additionally, there has been an indictment related to customs tax evasion on the importation of malt in the second quarter of 2025. These issues could lead to disruptions in supply chains and inventory buildup, potentially impacting the company's operations and finances. That concludes the financial summary for Budweiser Brewing Company, Apac Limited. Feel free to comment below, and I will be happy to answer them when possible.